The Canadian government has just announced a major shift in its tax policy. The long-anticipated increase in the inclusion rate for capital gains tax, originally set to take effect in June 2024, has now been postponed to January 2026. This delay, confirmed by Finance Minister Dominic LeBlanc, is expected to widen the federal deficit by a staggering $7 billion in the current fiscal year. The planned tax hike, introduced in the 2024 federal budget, would have raised the taxable portion of capital gains from 50% to 66% for individuals earning more than $250,000 in capital gains annually. For businesses, the new rate would have applied to all gains from the very first dollar. However, with this delay, the government will now forego billions in anticipated tax revenue, adding to an already significant deficit of nearly $62 billion. So why the sudden change? According to LeBlanc, the decision was made to provide certainty to Canadians, especially business owners and investors, as tax season approaches. But there's more to the story. The tax hike had faced intense pushback from business groups and real estate owners, who argued that it would discourage investment and economic growth. The opposition parties, Conservatives, Bloc Québécois, and the NDP, had also vowed to repeal the increase if they came into power. Moreover, with a looming federal election and political uncertainty surrounding the leadership of the Liberal Party, the tax hike's future is far from guaranteed. Chrystia Freeland, the former finance minister and a potential Liberal leadership candidate, has already indicated she would scrap the increase if elected. Conservative leader Pierre Poilievre has made the same promise. In the meantime, provinces like Quebec, which had planned to align their tax policies with the federal government, are now reconsidering their approach. The Quebec government, which expected to collect $1 billion in additional revenue this year from the capital gains tax hike, may also delay implementation, further complicating the fiscal picture. This decision has significant financial implications for Canadians. Some investors rushed to finalize transactions before the initial June 2024 deadline, only to find out they could have waited. Business owners and financial analysts are also left in limbo, unsure of what tax policies will actually be in place by 2026. Ultimately, this delay raises more questions than answers. With an unstable political climate and a federal deficit that keeps growing, it remains to be seen whether this tax increase will ever take effect. For now, investors and business owners can breathe a sigh of relief. But for how long? Stay subscribed for more videos.